8 days. That's how much time we have before a potential $300 billion economic disaster hits the United States. According to Reuters, published Saturday, February 21st, President Trump's own advisors are warning him, focus on the economy, not Iran. But here's the problem. Trump isn't listening, and according to one Trump advisor, quoted by Axios, there's a 90% chance we see military action in the next few weeks. 90%. This isn't speculation. This is someone inside the White House, someone in the room, someone who sees the planning happen every single day. And if those strikes happen, your wallet is about to take a massive hit. Whether you own stocks, whether you drive a car, whether you buy groceries, whether you heat your home. Hi, I'm Roxanne, and in the next 25 minutes, I'm going to break down the exact economic calculation that has Trump's advisors panicking. We're talking oil spiking to $130 per barrel, stock markets losing $3.5 trillion overnight, inflation returning to 7%, and a recession that could make 2008 look tame. This is not about politics. This is about your money. This is about what happens to the U.S. economy if this war moves forward. And by the end of this video, you'll understand exactly why precious metals just became the most important hedge you need to be watching. Let's get into the numbers. Let me show you how the $300 billion calculation works, because nobody in the mainstream media is adding all the costs together. First component, direct military costs. According to Israeli defense economists who analyzed a similar Iran operation, a multi-week air campaign costs $20 to $25 billion. But the American operation would be larger, more sustained, more comprehensive. Pentagon sources told NPR that full forces are ready by mid-March. That means maximum capability, maximum cost. Conservative estimate, $50 billion minimum in direct military spending. Aircraft fuel, munitions, personnel costs, base operations, logistics. That's your starting number, not your total. Second component, oil price spike. This is where it gets catastrophic. Brent crude closed Friday at $72 per barrel, according to multiple trading sources. That's already up from $66 earlier in the week. The war premium is already building. But if strikes begin and the Strait of Hormuz experiences any disruption, even temporary oil reaches $130 to $150 per barrel, according to historical precedent from the 1973 and 1979 oil crises. Why does the Strait of Hormuz matter? Because 20 million barrels of oil flow through that narrow waterway every single day. That's 20% of global oil consumption. If Iran closes it for even a few days, global oil markets panic. At $130 per barrel, here's the math. The American economy consumes 20 million barrels daily. At $130, that's $2.6 billion per day just for oil. But it's not the total cost. It's the premium above current prices that matters. The premium is $58 per barrel, the difference between $72 today and $130 during a crisis. $58 times 20 million daily consumption times 365 days equals $423 billion annually. Let me say that again, $423 billion per year just from the oil price increase. Not military spending, not stock market losses, not reconstruction, just the oil premium alone. Add $50 billion in direct military costs, and you're already over $470 billion. And that's assuming the war lasts only 1 year. Assuming oil returns to baseline afterward. Assuming no prolonged Hormuz closure. Reality could be far worse. Let me translate those big numbers into your daily life. If oil hits $130 per barrel, gas prices in the United States exceed $6 per gallon. In some states, it could hit $7 or $8. Right now, according to AAA, the national average is around $3.50 per gallon. You're looking at gas prices nearly doubling. For a family that drives 2 cars and fills up twice a week, that's an extra $300 to $400 per month in fuel costs. That's $4,800 per year just on gasoline. Heating costs double. If you heat your home with oil or natural gas, your winter heating bill could go from $200 a month to $400 a month. Food prices increase 20% because transportation costs surge. Every truck that delivers goods to your grocery store runs on diesel. When diesel prices spike, food prices spike. This isn't abstract economic theory. This is your grocery bill, your gas bill, your heating bill, all increasing simultaneously. Trump won re-election in 2024 on a promise to reduce inflation and lower costs. A war with Iran brings all of that roaring back. Third component of the $300 billion trap, stock market collapse. According to financial analysts, the Dow drops 3,000 points when strikes begin. The S&P 500 loses 7%. The Nasdaq drops even more because tech stocks are the most sensitive to economic shocks. 7% of total U.S. stock market capitalization means $3.5 trillion of wealth destroyed overnight, not $300 billion, trillion, with a T. That $3.5 trillion gets wiped from retirement accounts, from pension funds, from 401k plans, from middle-class savings. If you have $100,000 in your retirement account, you just lost $7,000 in a single day. And we've already seen this start to play out. On Monday, February 23rd, after the Supreme Court tariff chaos, the Dow dropped 771 points. That was just from tariff uncertainty. Imagine what happens when actual bombs start falling. The VIX, the fear index, jumped 15% on Friday alone. Gold surged to $5,200 per ounce. Treasury yields dropped as investors fled into safe haven assets. And that was before any military action. That was just from anticipation, just from reading Reuters, just from seeing the deadline approaching. Actual authorization will trigger movements 10 times larger. Fourth component, inflation. The Consumer Price Index is currently running at about 3% to 4% according to recent Federal Reserve data. That's already higher than the Fed's 2% target. But an oil spike to $130 per barrel adds 2 to 3 percentage points to CPI according to Federal Reserve historical models. That means inflation reaches 6% to 7%. The inflation that Trump defeated in his first term returns in his second term. And it returns violently. $6 gas. Heating costs doubled, food prices up 20%. Every household, every voter, every polling place in November feels it. And here's the Federal Reserve's nightmare scenario. If oil hits $130 and inflation jumps to 7%, the Fed should raise interest rates to combat inflation. But the economy is weakening. GDP growth already slowed to just 1.4% in Q4 2025, well below the 2.5% forecast. Raising rates triggers a recession immediately. Not raising rates allows inflation to accelerate to 8%, then 9%, then double digits. The Fed is trapped. Either choice destroys the economy. Either choice destroys Trump politically. This is exactly what Trump's economic advisors see. And it's why they're desperately urging him to focus on the economy instead of Iran. Let me show you the electoral math that makes Trump's advisors panic. Republicans currently hold the House by a thin margin, 222 Republicans versus 213 Democrats. That's a 9-seat majority. Historical pattern, the party controlling the White House loses an average of 30 seats in the first midterm. In 2018, Democrats gained 40 seats. In 2010, Republicans gained 63 seats. A 30-seat loss from a 9-seat majority equals a 21-seat Democratic majority after November. The House flips. Speaker Hakeem Jeffries. Trump's legislative agenda is dead, but that's without an economic crisis. With the $300 billion trap triggered, with oil at $6 per gallon, with retirement accounts crashed, Republicans lose 50 seats easily, maybe 60 or 70 seats. A massive Democratic House majority, veto proof on some legislation, impeachment becomes possible. The Senate is worse. Republicans are defending 21 seats in the 2026 cycle. Democrats are defending only 13. It's an asymmetric battlefield already. With gas at $6 per gallon in November, Republicans lose 7 Senate seats minimum. Pennsylvania, Ohio, Wisconsin, Arizona, Nevada, Maine, North Carolina, all flip Democratic. Democratic Senate plus Democratic House plus lame duck Trump equals 2 years of investigations, 2 years of blocked appointments, 2 years of legislative paralysis. That's what advisors see. That's what their warnings are about. Concrete political destruction, 8 days away. So why can't Trump's advisors stop this from happening? According to Reuters reporting, White House advisors and Republican campaign officials want Trump focused on the economy. This was stressed as the top campaign issue at a private briefing this week with numerous cabinet secretaries. Trump was not present at that meeting. That tells you everything. His own team is meeting without him to figure out how to get him to focus on what voters actually care about. According to CNN reporting, Trump has privately argued both for and against military action this week, polling advisors and allies constantly. Polling means uncertain, means conflicted, means he knows the economic risks, but feels boxed in militarily. He deployed 2 aircraft carriers. He positioned 300 combat aircraft. He moved B-2 bombers to Diego Garcia. He made public threats. All that hardware deployed creates pressure to use it. Military readiness creates operational expectation. You don't move 2 carrier strike groups halfway around the world and then do nothing. Trump's instinct his entire life has been to double down, to press advantage, to never appear weak. Those instincts worked in business, worked in politics, built a career, a fortune, a presidency. The same instincts are now driving him toward the biggest economic mistake of his career. Let me show you what Wall Street is already pricing in, because markets don't wait for authorization. Markets prepare for disaster now. Oil prices have surged to 6-month highs. Brent crude is trading around $72 per barrel, up from $66 just days ago. West Texas Intermediate is at $66.50. According to Vandana Hari, founder of Vanda Insights, Brent crude currently carries an estimated $10 per barrel geopolitical risk premium linked to Iran. But here's what's really telling. Traders are buying call options on Brent crude at strike prices of $100 per barrel. That means they're betting oil could spike to triple digits if war breaks out. Option markets don't lie. When traders are willing to pay premiums for $100 oil options, they're telling you they think it's possible. Gold prices also confirm the fear. Gold hit $5,200 per ounce on Monday, a 3-week high. That's within striking distance of the all-time record we saw in late January. JP Morgan analysts came out this week saying they expect gold to reach $6,300 per ounce by the end of 2026. That's a 30% gain from current levels. Their reasoning? Gold is a hedge against multiple risks: trade war escalation, fiscal deficits ballooning, geopolitical tensions with Iran, and erosion of confidence in fiat currencies. Silver also surged 6% on Monday to $87.30 per ounce. That massive move happened for the same reasons gold is rising: safe haven demand as markets price in economic chaos. Let me show you what happens to specific industries if the trap closes. Airlines. Jet fuel costs double instantly. Ticket prices increase 50%, demand collapses, airlines furlough workers, United, Delta, American, Southwest, all cutting flights, all cutting staff. The airline industry employs 700,000 Americans directly. Support industries employ 2 million more. That's 2.7 million jobs at risk from an oil spike alone. Automotive, car sales collapse when gas hits $6 per gallon. Dealers close, factory production cuts, layoffs follow. Detroit gets devastated. Michigan swings Democratic in the midterms. The Rust Belt is destroyed politically. Retail, consumer spending drops 20%. Stores close, malls empty, commercial real estate crashes. Banks holding retail mortgages face losses. A banking crisis follows. Hospitality. Nobody vacations during a recession. Hotels empty. Restaurants close. Tourism collapses. Las Vegas, Orlando, Hawaii. Entire economies built on discretionary spending evaporate overnight. These aren't economic models. These are real businesses, real workers, real families, real voters, all affected simultaneously, all blaming Trump, all voting Democratic in November. So what do you do to protect yourself? This is where precious metals become critical. And I'm going to be very clear about why. Gold and silver surged on Monday while stocks crashed. That's exactly what safe haven assets are supposed to do. They move in the opposite direction of risk assets during times of crisis. When you own physical gold or physical silver, you have zero counterparty risk. You don't need to trust a bank. You don't need to trust a government. You don't need to trust a corporation. You own the asset outright. If oil spikes to $130 and inflation hits 7%, the value of your dollar-denominated savings erodes. But gold and silver hold their value because they're priced globally and have been money for 5,000 years. The stock market can crash 7% in a day and wipe out $3.5 trillion. Your 401k can lose value overnight, but the silver coin in your hand is still a silver coin. The gold bar in your safe is still a gold bar. That's why JP Morgan is forecasting gold at $6,300 by year end. That's why silver surged 6% on Monday. That's why investors are piling into precious metals as a hedge against what's coming. Now, I'm not saying dump all your money into gold and silver. That's not what I'm advocating. But if you're worried about oil shocks, inflation returning, stock market crashes, and geopolitical chaos, a modest allocation to physical precious metals makes sense. Most financial advisors recommend 10% to 15% of your portfolio in precious metals. Right now, given what's happening with Iran, I'd lean toward the higher end of that range. So where are we right now? Trump set a deadline. According to his own words on Thursday, Iran has probably 10 days. Maybe we make a deal. Maybe we take it a step further. 10 days from Thursday means March 1st at the earliest, March 6th at the latest. As of today, Monday, February 24th, we're inside that window. The decision is coming this week or next. According to Axios reporting, one Trump advisor said, "Some people around him warn against going to war, but I think 90% chance kinetic action next few weeks." 90% despite the warnings, despite the economic projections, despite the electoral risks. Why? Because Trump feels boxed in by his own military buildup. 2 carriers deployed, 300 aircraft positioned, B-2 bombers on standby. All that hardware creates pressure to use it. And Trump's entire political brand is built on never backing down, never looking weak. Backing down now means looking like he got played by Iran. So what's more likely? Trump chooses economic catastrophe, or Trump chooses to look weak? History suggests he'll choose catastrophe. Here's where we are. Trump's own advisors are warning him, focus on the economy, not Iran. But he's not listening. A 90% chance of military action in the next few weeks, according to insiders. And if that happens, we're looking at a $300 billion minimum economic disaster. Oil spikes to $130, gas hits $6 per gallon, stock markets lose $3.5 trillion. Inflation returns to 7%. Recession triggers. Republicans lose the midterms catastrophically. And your money is in the crossfire. Gold surged to $5,200 on Monday. Silver jumped 6% to 87. These are safe haven assets doing exactly what they're supposed to do, protecting wealth when everything else is falling apart. I'm not here to tell you what to do with your money, but I am here to give you the information you need to make informed decisions. If you think there's a 90% chance of war, and if you think that war triggers the economic chaos I just laid out, then you need to be positioned accordingly. Now, I want to hear from you. Are you buying precious metals as a hedge right now? Are you moving money out of stocks? Are you holding cash? Are you doing nothing and hoping this blows over? Drop a comment below. I want to know what you're seeing in your portfolios and how you're preparing. And if you found this breakdown valuable, if understanding the $300 billion trap helped you see what's really at stake here, hit that like button, subscribe to the channel, and share this with anyone who needs to understand what's about to happen to the US economy. Because we're 8 days away from finding out if Trump's advisors succeed in stopping this, or if the $300 billion trap snaps shut. I'm Roxanne, and I'll see you in the next one. Stay informed, stay prepared, and protect your wealth.